Hey everybody, welcome to Mortgage Today for Thursday, August 3rd, 2023, and oh, what a day it was. MBS were down almost a half point very early this morning. Bonds got spanked overnight despite a lack of overt motivations. Yields had risen more than 5 basis points by the open, but at least data isn't adding to the weakness. Long-dated US Treasuries headed for their worst week of the year amid signs of unexpected resilience in the U.S. economy and fresh reasons to fret about the ballooning budget crisis. Jobless claims came in at 227,000 on a 227,000 forecast, but it was 221,000 previously, so up 6,000, but still a very strong number. Labor costs came in at 1.6 versus 2.6 forecast, meaning it's cheaper to hire people. It was 3.3 previously. Productivity rose 3.7% in the first quarter, which was way higher than expectations. The increase was driven by a 2.4% increase in output and a 1.3% decrease in hours worked. Unit labor costs rose 1.6%, which was driven by a 5.5% increase in compensation and a 3.7% increase in productivity. Rising productivity is generally good news for battle against inflation and should give the Fed more ammo to pause in September. Announced job cuts fell 42% in July, according to outplacement firm Challenger Gray and Christmas. They were down on a year-over-year basis for the first time this year. Hot labor market data is rising concern for the Federal Reserve. We'll have to push up rates and even further cool the inflation. Traders are bracing for Friday's employment report. With yields hitting an 8-month highs and failing to bounce back in a resounding fashion, the trend is not our friend. That argues a lock-based bias stance until we are clear evidence of a reversal. Data dependence is one thing, but at some point yields will be high enough where investors will see a clear buying opportunity. Many are theorizing that the market is reacting to the glut of supply coming from the US Treasury. The government is expected to raise $1 trillion this quarter, up from the $750 billion estimated. This will most likely be on the short end with mostly 2-year Treasuries and bills, but still throws a lot of supply and demand into there. Another interesting stat is the U.S. debt has 5-tupled in the last 12 years. That's so much money. Richmond Fed President Barkin made comments that seemed less optimistic about the economy with higher chance of recession, making people think that he would be against a hike in September. Tomorrow we get the BLS jobs. Previously came in at 209,000. Estimates are at 200,000. This is hot on the heels of a big beat by the ADP jobs. If this number comes in high, it could really confirm the range. The bond market isn't necessarily expecting jobs report to come in higher or lower than expected. I mean, that's what expectations mean. But if it were to come in higher, it would be just sort of terrible luck that seems to be falling bonds. In the midst of a curve-driven repricing, bonds have been hit by a higher Treasury borrowing needs, lower buyback plans, a ratings downgrade, and the largest foreign holder embarking on big selling campaigns to control its own yield curve, which is the Bank of Japan. At the end of the day, bonds were down 31 basis points, which puts us at 98.38, which is a pretty rough price. So that puts us down in this really low range here. God, I don't even want to think about it or look at it. If it holds and confirms, if we get a bad job report or actually a good job report tomorrow, could confirm this lower range, but hopefully we can at least get back up into this range where it has a ceiling at 99.283 instead of 98.716. But in terms of things you can control, it's your brain and your message. So from our sponsor at WellThatMakesSense.com, it's talking about control the message. This is the most important thing you can do. This has more control over your income than the Fed does or bonds or rates. It's about controlling the message. The person asking the questions are in control. So make sure you're the one controlling the conversations when you're selling things to people or leading people. So check it out at our sponsor at WellThatMakesSense.com.